Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Darrell Thomas, and today we have the pleasure of sitting with Jeff Clark of the Gold Advisor. How you doing today, buddy?
I'm doing great, Darrell. Thanks for having me.
Always glad to sit down with you. You know, someone that's been doing their due diligence in this space for a long time.
Yeah. I think this is a good time to have this talk too, based on what's happening in the market.
Yeah. So, what's your overall sentiment of what's happening in the market? I mean, you've been through more than just this bull market cycle. This is my first time, and so what are you seeing, and what should new investors expect in this bull market?
Well, first of all, I think it's important to acknowledge that we are in a gold bull market. And a lot of people might say, well, duh, Jeff, the gold price has been rising. But what happened in 2024 is that the gold price rose, and a lot of people, especially last fall, were saying, hey, what's going on with the mining stocks? Why aren't they rising? Well, now if you look at especially year to date, but even since the bull market started last February, if you look at the charts, GDXJ, the junior miners index, is outperforming GDX, the senior miners index, and GDX is outperforming gold. So you have the exact ingredients of a bull market in gold. This is the time to invest. This is the time to speculate. So I think what I would say about the timing and where we're at now is that it's just beginning because a lot of stocks didn't even start moving till this year. So it's very young. It's very early in the bull market. As I've been saying to others, the easy money has been made, but the big money is still ahead. So it's not too
Hmm.
late to invest.
Yeah, got it. So when you say the easy money has been made, are you referring to some of the larger cap companies or whatnot? I mean, obviously the ETFs, the GLD and such, those have moved significantly versus like the junior miners and such. So when you mention like the easy money has been made, what does that mean?
I'm referring to stocks that many of us have been sitting on for years. Nothing's been happening. And all of a sudden, they ignited. Most of them, like I said,
Mhm.
this year. And so we're just sitting there, and all of a sudden, they jumped and have doubled or tripled year to date, some even more than that. Um,
Mhm.
so that is the easy money where you're just sitting there and all of a sudden you're sitting on a double and then you get a triple and that kind of thing. But that's not the big money. Believe it or not, the big money is still ahead. So we're going to see five baggers and 10 baggers out of this bull run. Did you know, Darrell, there were 141 10 baggers in the last bull market just from 2009 to 2011, just that 3 year period. It was actually only 2.5 years. There were 141 of these things that went at least 10x. Many went more than 10x. So we're not going to catch all those, of course, but what if you could get just like 10% of them or even just 5% of them? That'd be
Mhm.
seven, 10 baggers in your portfolio 2 or 3 years from now. I think anybody would be happy with that, but I think that's what's ahead.
Yeah, that sounds very exciting. So people definitely have to choose their investments wisely in that. It's kind of interesting when you mentioned the easy money because I do see it as easy money, especially for me having a longer term time horizon. Some of the companies, especially in the junior space that I've bought, a couple years ago. I never really looked at the portfolio. I just would throw some money in, wouldn't really look at the portfolio as much, and then starting to see like those equities move is
Yeah. Yeah.
pretty. I mean, some people may say like, well, obviously Rick would say you're supposed to spend an hour a month with whatever you're invested in, but these were kind of like speculation, kind of picks, and they moved, and so it was easy for me versus like I think if someone were to um kind of weather some storms of like a 20% drawdown or a
Yeah.
30-40%, that's hard to stomach, at times. And so,
Yeah.
I mean, for me, I think it was easy money because I was able to park capital, like doing my initial due diligence on the companies. Okay, these are solid companies. Let me just park some capital here just to see what it does. And then looking at my portfolio, I'm like, oh, wow, it actually moved up. That was pretty easy
Yeah, right.
versus
Yeah.
someone who may have to stomach some of those drawdowns, moving forward.
Right. And that's a good point, Daryl. It's not like there's not going to be more drawdowns ahead, especially with the juniors. They're very volatile. A 20% drop in a day may mean little. If it's not based on company news, it may be some executive who's selling a bunch of shares because he's got a kid starting college or he's got health concerns with his spouse. So um, you have to be willing to stomach the volatility, but it doesn't necessarily, volatility is different than risk.
Hmm.
Risk is a separate entity. You just have to get, prepared and be ready for the volatility and use it to your advantage. That's the whole point.
Yeah, yeah, for sure. So let's jump into like just some of the specifics of what's been happening. Recently, we've had some earnings calls of some of the larger miners, Newmont, Agnico Eagle, and such. And so, just want to get your perspective on the earnings calls and what has been said there that really sticks out to you.
So, Gerald, you know what the big thing is that earnings and free cash flow, which is actually a more accurate measure, arguably, than earnings, have jumped double and triple digit percentages. And yes, triple digit percentages for some of them year over year. And it's primarily because of the higher gold price. You're selling a product at a much higher price, you're going to make more money. There was some M&A in there with some of those bigger companies, but the big jump, the increase in earnings and cash flow of the big producers is primarily due to the higher gold price. And these guys are printing cash right now. A lot of them. There are exceptions, but they're really just printing money right now. It's really something, and that leads into what I suspect will be your next question: M&A. It does help M&A.
Yeah, yeah, for sure. So looking at the cash flows, I mean, obviously, I'm more into like the royalty and streaming companies right now. I do have some exploration and some miners, but more so royalty and streaming. And oftentimes the benefit of that, it's like the less operational risk and costs and things of
Yeah,
that nature. But when you get the miners printing this type of cash and free cash flow, what do you think that means for even their other costs that they have? I mean, obviously, if they're getting free cash flow, then that means that they're able to take care of their costs and have that cash flow from the earnings continuously to grow.
yeah.
But
We
what's your take on the other expenses? Because typically people will look at mining as like, okay, this is very intense with expenses and operations and those types of risks.
It is intense with all the costs they have involved. We had inflation, as everybody knows, and it's remained elevated, but it has kind of plateaued. And so the miners' costs have really plateaued or stopped rising to a large degree. Again, there are exceptions. But they've stopped rising, yet the gold prices continued much higher. So the margin, even though we have elevated inflation, the margin for these producers is greater than it was 1 year ago, 2 years ago, 3 years ago,
Hmm.
especially, even though costs are higher. It's because the gold price has risen much more. You have to also consider that the oil price is down. And a large expense for these guys is fuel and oil and things like that. So, costs are really not prohibiting a growth in margin for the producers.
Hmm. So right now, the gold price being elevated near all-time highs measured in dollars, it's obviously benefiting the miners to have this level of cash flow, free cash flow. And so what's your outlook on the gold price from here? I mean, because obviously if the gold price falls, then that can hurt the cash flow. But obviously, I believe it's going higher. I think that the gold advisor believes it's going higher too. But
Yeah.
just want to get your perspective there.
Well, you have to keep in mind it's the average gold price for the quarter that matters to a producer. They may sell gold every day or once a week or whatever. They all have different schedules. But at the end of the quarter, what matters is what is the average gold price that they sold during that quarter. So if gold is weak for the next few weeks or whatever, that has less of an impact on what they're selling gold for overall. So they can still be profitable even if the gold price is weak. So in the short term, I don't know that the gold moves all that much, but everybody's going to be back to their desk from summer vacation after the Labor Day holiday in the US, September 1st. And September is, if you look at a chart and you average out the gold price over the last 50 years, September is the best month for gold. Now, there are exceptions. Maybe it isn't the best month of the year this year, but traditionally, September has been a very good year for gold. What's also interesting, I have to point out real quick, Darrell, is that even though the gold price has been flat here for, a couple of months at least, it's kind of trading in a range. Some of the miners are doing very well. And some of the better miners might have a pullback, and that would be a good entry point for someone. But overall, the miners have continued to be strong despite the range trading in the gold price.
Hmm. Yeah, yeah. Thanks for sharing that. And do you think that there's any impact with the S&P being at all-time highs? I mean, obviously the AI narrative and such, it kind of seems like it brings a little more competition in the space
Yeah.
for like gold equities. I mean, even there's I think the statistic was like less than half of 1% of people own like gold in their portfolios and such. And so was kind of thinking about that recently. I mean, because if we do look at the last bull market in the early 2000s, I mean, natural resources were just running, like they were just running up significantly. Almost every natural resource you could think of, from
Yeah.
agriculture to to gold, silver, everything. And I was thinking about, okay, what was the competition there? And I did see like, coming out of the dot-com bubble, we had emerging markets. They had their time to shine, and then we had obviously real estate. And so, I mean, we could argue that those were competitors to gold at that time. So just thinking about S&P right now and markets at all-time highs. Do you have any thoughts there?
That is probably the explanation as to why gold and gold stocks haven't catapulted significantly higher here in the recent term. It's because Main Street and Wall Street, they're all playing over in the Nasdaq and the S&P and the Dow and AI and all that stuff, some crypto. Uh, so a lot of them are over there. It's when those markets go weak that I believe we'll see a pretty big demand for both gold and gold stocks because those markets will be weak or they won't be making money or whatever the case is. They'll see a lot of green on the screen over in our sector. And I believe when they come over, that's when we're going to see a very big push and a significant jump in demand again for both gold and gold stocks.
Yep. So there's still time for investors. That's what I'm hearing there.
Yeah, that's exactly right. It's a good way to put it. That's another reason why there's still time because Main Street and Wall Street have not come over. In some cases they have, but for the most part they have not.
Yeah, and that relates to
Yeah.
the big money. The big money you mentioned,
There
when
you go.
that
There
money
you
comes
go.
over, it's another level.
The copper market, of course, is the biggest metal market on the planet, 2 to 300 billion globally of metal traded. Following majors around and picking up projects that they jettison can lead to great success in this business. Vizsla Copper, we're the team that brought you successes including ISO Energy and Vizsla Silver. If you want to learn more, you can find us at vizslacopper.com.
So just want to touch on mergers and acquisitions really quick. What's your take on that? Saw something recently with Goldfields. Obviously, we had Royal Gold and Sandstorm and such. And typically, I mean, we see this whenever miners are printing cash. Like you see more of these mergers and acquisitions. And so, just want to get your perspective there.
Yeah, M&A is underway in this sector, but it's going to continue. One reason being, we know the seniors need ounces. If they produce 1 million ounces a year, they got to replace 1 million ounces a year just to stay where they are, let alone grow. They need ounces, and now they have more cash, as we were talking about earlier. Their cash flow and earnings is much higher, materially higher. So they have the cash now to go out and actually buy. And that answers the question why some of us, a couple years ago, even last year, wondering why the heck aren't the producers buying some of these juniors that are so cheap they could buy 5 of them for what they could buy 5 years ago. And one reason is because they didn't have a big increase in cash flow. So they have that big increase in cash flow. We have a sustainably higher gold price. And there's another factor. If you remember back in 2011, for those that were investing in the sector then, one of the big complaints of the producers was how much debt they took on. And it was enormous. They had way too much debt. Well, they've cleaned all that up. In fact, the ratio between earnings and debt, on average for the gold producers, is projected to be this year 0.
Wow.
Earnings over debt. So that means they have not only more cash, but they have less debt. So they're in a perfect setup to take on more companies now, and they're going to need ounces. So for those reasons, I think the M&A trend is going to continue.
Hmm. Got it. Yeah, thanks for sharing that. What do you think about the supply and demand right now? I know that silver, there's been multiple reports about being in a deficit, and um, I don't necessarily think that applies to gold, but I just want to get
Yeah.
your perspective there.
Yeah, it doesn't really apply to gold, but for silver, it's interesting because the demand is much greater than annual supply by 100 million ounces and more. And this is, I believe, the 5th year. Peter Kraut for us covers the silver sector in depth. So he can comment on that better than I can. But I believe this is going to be the 5th year of a deficit. Now, it doesn't mean there's a supply deficit, because there is above ground supply stocks in various inventory in various countries and vaults. But it does mean this is a trend where they're using some of that existing supply, to meet demand. And so the above ground supplies are dropping. They're down by something like 25%. So that trend's probably going to continue for a while. What excites me, of course, is when the silver price runs up to 50 again, and then if it breaks through 50, Darrell, look out. These silver stocks are going to scream. So that's what I'm watching for.
Yeah, yeah, for sure. Yeah, that's really exciting. So obviously, the demand is exceeding supply, and that can only happen for so long. Eventually, you revert to the mean at some point. And silver um, isn't at all-time highs measured in dollars.
Right.
So, I mean, I've been seeing a little more opportunity there. I'm still buying gold today at today's prices, but my purchases have slowed down significantly as far as physical gold. Um, because I just think that, converting some fiat into real money is important. And so I try to make that a habit of mine, whether it's, down, whether it's up, eventually I'm just going to pass to my kids, Lord willing, we don't have to use it, but,
Right.
but, with silver, silver being, $38, $39 an ounce, it still hasn't reached that $50 high as gold has went up significantly. So I've been seeing more opportunity there, and just want to get your overall sentiment on silver right now.
Well, you're right. And that's a critical point that silver is still below its non-inflation high of $50.
Yep.
You adjust that for inflation, it should be 125, 135. I'd have to look it up, but it would be triple digits just to adjust for what it was at the 1980 high. So it's one of the very few commodities that you'll find that is still below its 1980 high. That's kind of crazy. So I think we have that to look forward to. I do think that silver rents to 50, and I do think it breaks through 50. It's kind of in the formation of a cup and handle here, so that handle may not be completely formed till next year. But I'm excited about it. I'm remaining long, silver equities, and I think some of these things, like I said, I think they're going to scream at some point if we're right about where silver goes.
Yeah, got it. Yeah, thank you sharing that. So I do want to get into like what part of the chain are you most interested in right now? I mean, obviously we got the large tier one miners, and then we got exploration, producers, developers, prospect generators, royalty streamers. We got
Yeah.
so many we got so many different areas in the chain, and so interested in where are you at right now?
Well, if you don't know, my dad was actually a gold prospector. He didn't work for a company; he worked on his own with a group of guys. He had a couple interesting finds, couple nice finds. So that kind of runs in the blood. So I'm more looking at the prospecting side, meaning the explorer side. If you're gonna be down that part of the food chain, then you need to diversify your risk because these are higher risk, earlier stage companies. They're not all going to make a discovery. So you do need to buy 5 or 10 of them, not all at once necessarily, but you need to spread your risk around. Uh, you're going to have some that are going to make a big discovery and double, triple in a week and 5x and 10x over the life of the company. So it's pretty exciting. It can be life changing. Um, so you have to diversify your risk, and I devote a whole chapter in the book Pay Dirt. Not trying to promote it, but there's a whole chapter in there specifically about how to speculate in early stage exploration opportunities. On top of the method that I use to screen companies, the main thing is you've got to have the very best team that you can find that is working on that project. You have to be in a pro mining jurisdiction so that it's attractive to be bought out someday if they make a discovery. And then third, you want a project that is like my grandma's chocolate chip cookies, big and rich. You want something, and if they're looking to make a discovery, you don't know if it's going to be big and rich yet, right? But there needs to be some geological evidence that they're on the right path to perhaps finding something like that. And again, that comes back to the team and their experience. Have they done what you're looking to invest in? Have they done it before? Have they been successful before? That's what you're looking for.
Yeah, yeah, for sure. Yeah, definitely a lot to learn there. I encourage folks to go check out the book Pay Dirt as well. That's an important topic. So you mentioned looking at the team. So obviously, some folks have been in this business for a long time. Some people have been raised in this business, and such, and so they have like a good rich amount of exposure to the side of the business and such. And so when you're looking at teams, are you mostly looking for people who you're familiar with or companies that you're familiar with and their experience there? What else? What are you kind of looking at when you're looking at the team?
I'm looking for one very specific thing. Well, two. One is I want to see them having invested their own money,
Yeah.
so much so that they're at risk. They're backed into a corner financially and they've got to make this work. that's a great setup right there. But the main thing that I'm looking for is, well, I should say on top of that, is not just an experienced team member. Anybody can write a good resume. I don't like to read resumes. What I want to know is, what companies did you run before? And let me go look up the stock price and what it did when you were there.
Yep.
If they were successful in either making a discovery or creating shareholder value in any other way, that's what I'm looking for. If they've failed, especially if they've failed multiple times, you know, they might be a nice person, but I'm just not interested in investing in them. So those two things are deal breakers for me, really. I would start there.
Yeah. Okay. Got it. And then you also mentioned the pro mining jurisdictions. So obviously, a lot of these exploration companies have projects next to, some of the bigger miners, Newmont, Barrick, and so on and so forth. Is that something that you're looking for? It's like, okay, we have some big money here, big projects here. This has to be a good jurisdiction. What are you looking at there?
Yeah, that's a good point. What neighborhood is the company in? That doesn't mean they're going to be successful, but if they're in a good neighborhood where there's been lots of gold found before, with either projects or mines, look at Quebec, especially Nevada, especially. Just you can go almost anywhere in Nevada or Quebec and not be surrounded by mines and projects, right? So that's important for me. Plus, keep in mind that if this company is successful at making a discovery or growing a resource, whatever you're investing in there, the pro mining jurisdiction makes it more attractive to be bought out. A major miner, the last thing they want is to be in some risky jurisdiction where the rule of law is not enforced, property rights aren't enforced, or they change the mining regulations or permitting procedures all the time. If they do that, that's going to scare away a miner from buying the company you're investing in. It makes it a lot easier for them to say, yes, we'll buy this company at a premium if it's in a pro mining jurisdiction. So I look for that.
Yeah. Yeah, definitely. Otherwise, it's going to be hard to sleep at night, especially for some of the platinum investors out there. There's a lot
Yeah.
of in those areas. Uh, so,
Yeah.
so when you're looking at financing, obviously financing is a big thing, because shareholders don't want to be diluted and such. And so, what are you typically looking for as far as like how some of these early stage companies are generating capital for these projects?
Well, juniors only have one way, primarily one way, to get capital, to get money to go drill and go explore, and that is through financings, through placements, private or otherwise. So we don't want them to take out debt because we don't know if they're going to be successful. We don't want them to give away a stream or a royalty. We don't know how big this thing is yet. So the primary way is through a raise. And the interesting thing that's going on right now, Darrell, is that a lot of the raises have jumped significantly in the amount of money that they're raising and the number of investors that are coming in. There's a lot of placements that have been very crowded, and the demand has been more than what the company wanted to raise. A lot of raises are oversubscribed. You have companies raising 5 million now that had a hard time raising 1 million just a year ago. So there is definitely a jump in demand for private placements within our industry. And that's mostly people from within our industry, fund managers, institutions, bank analysts, et cetera. It's not the Main Street and Wall Street crowd that we talked about earlier. They're not in yet. This is all just within our field. But there's a very good green light there, right? That these guys are very excited about where mining stocks are going in general, and specifically the ones they're investing in. So that's a signal to me that it's another confirmation, let's put it that way, that this is a bull market and it's going to run. And if you see financings that are oversubscribed, it doesn't make it an automatic buy, but boy, that sure does stand out.
Yeah, yeah, definitely. So let's just jump into two or three companies, that you're kind of looking at, and what 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 is attracting you to these projects or these companies?
Well, we have the free newsletter, the Gold Advisor. There's a couple in there I would highlight, especially the new ones. One is Gladiator Metals. It's a copper explorer up in the Yukon. They are hitting high grades. There's a good video I did with the CEO on our website, on the media tab, where I interviewed him. We talked about why this company is in a better position than most other copper explorers, and it's because of the grades they're hitting. I own a tranche of that stock, but the darn thing ran away, and I haven't been able to get my second tranche yet. I'm trying to go overweight this stock, but it just keeps on rising. So, but if you want it, get a first tranche, go ahead and buy it on the next dip, and then watch for a second tranche if it falls materially further. Another
Hmm.
new one is Prince Silver. They just changed their name and all that. You can read about it on the website, but this is a new pick of ours. It is there's been some trouble with U.S. investors buying it, but they have a U.S. ticker coming. But the main thing about this one is they could very well already be sitting on 100 million ounces of silver in Nevada. And it's because there was an Australian company that owned this project, the Prince Project, and they did what's called a JORC report. And that's similar to our 43101. It's a little different. It's kind of like an inferred resource, but it showed that the tonnage there could easily add up to 100 million ounces silver equivalent. And Ralph Shearing, the CEO, thinks it could be even bigger. So if you can get a piece of that now or when the US ticker comes, I would definitely take a look at that. Western Exploration is another one that's in Nevada. In fact, I'll tell you, Darrell, you're the first to know, I'm going on a site visit with the company next week, but probably by the time this interview's out. So I'll be on site. I'll be filing a report there. It'll be free on the website with lots of pictures and everything about the development there. Stock is down temporarily, but they have a resource already. So this is a lower risk pick. So I might take a look at Western Exploration. And then the last one I'll mention is this one. If you can see this here, Outcrop Silver. I was actually in Colombia, where the project is, last summer, and I got to tour it, got to meet everybody. They have a 35 million ounce resource, I believe it is right now. But with all the drilling they're doing, they keep making new discoveries. They've found 6 new discoveries on their property within the last 12 months. In my opinion, they are likely on their way to a 100 million ounce resource as well. It may take a couple resource updates to get there, but the stock has not taken off yet, like some have. So it's a good opportunity to get in now. It's a deep value, in my opinion. And I should say that I am overweight all the stocks I just mentioned, with the exception of Gladiator, which I haven't been able to go overweight yet. But those are 4 pretty good picks that you can read for free on the website.
That's good. That's good. Thank you for sharing that with the audience. And just so the audience knows, like, what is the difference between like your free newsletter and the paid newsletter? So obviously, I'm assuming
Yeah.
that the paid newsletter is going to provide even more value or analysis.
The paid newsletter, Paid Prospector, it's named after the book and it follows the methods in the book. It is a subscription newsletter to investors. It's pretty inexpensive. It's one of the lowest in the industry that you'll find. And we update every Thursday. But it is a little more earlier stage, off the radar, a little bit higher risk than what is in the free newsletter. But I've devoted a lot of my capital to the picks that are in there. They don't get in unless we own them. So everything on the website, free or paid, are stocks that we own, whether it's me or Peter or any of the other analysts we have writing for us. So that's the subscription newsletter. And I will point out, I don't know what day this will air, dear, but we have a new pick coming out on August 20th. You might want to read about. We have another new pick coming in September before the Metals Investor Forum conference I'll be at. This is one I bet you've never even heard of, so you want to check that out. I'm going overweight that stock. And then the free newsletter is basically like the paid newsletter. We cover all major developments, etc., except it's free. And that's because it is a sponsorship letter. So the companies themselves are supporting the site financially, but that makes it free to investors. And again, we don't invite any companies. We get a lot of companies asking to come on, and we say thanks, but no thanks many times. And it's because it has to meet our criteria. It has to be a stock we either own or would buy after we first give it to investors. So there is some heavy duty screening there. We don't want some fly by night company in there that's not going to have staying power. So, but that's a free newsletter that covers mining stocks, just like you might get in a paid newsletter. All you're going to do is sign up, create a password, and you're good to go. We don't do any spam. There's no reselling, and you can unsubscribe anytime.
Yeah, that's helpful to know. I mean, especially that you all are looking out for the retail investors, best interest.
Absolutely, because we're investors too. It's
Yeah.
my money at stake too. So that's how they get in there. That's the good thing about all of this.
Mm-hmm. Yeah, and all of this, I mean, it all still carries risk, but it's good to reduce the risk as much as possible. So
Absolutely.
definitely appreciate you sharing that. Jeff, where can people go to connect with these resources and everything as we wrap up?
Everything's under thegoldadvisor.com. That's the umbrella. Everything is there. The free letters, the paid newsletters. Peter and I both have books there. Peter Kraut came over when we acquired. We were talking about M&A in the resource sector. We had a little M&A in the newsletter sector last year. We bought Gwen Preston's business and incorporated all that. He came over in that acquisition. So, like I said earlier, he focuses primarily on silver. And boy, he's had a lot of success in their stocks that have run up. He's had multiple doubles already this year that he's recommended people take profits on. So that portfolio is doing well, even though silver hasn't really busted out yet, right? So my letter covers gold, copper, and uranium. We might get back into lithium at some point here, but not yet. So there's a lot of resources there. We have a pretty robust website. I love the website. So people can check it out.
All right. Sounds good. Sounds good. Well, thank you, Jeff, for coming back on the show. Everyone, be sure to hit the subscribe button. Love to have your support here at VRIC Media. And until next time, thank you, Jeff.
Great. Thanks, Darrell.